Hey traders and investors, it's Serge Berger here. It's no secret that large cap internet stocks like Facebook, Amazon.com, Google, and others have massively outperformed both in absolute and relative terms the broader stock market. And while these companies are growing, and there's real growth potential better so than in the broader economy in these stocks, that's not the entire reason why, particularly this time of year, they continue to work higher. If we look at the S&P 500, so the broader stock market in the US year to date, it's mostly been a chop fest sideways. That is, of course, if we just kind of for the moment forget the big sell-off that we had in August and then the sharp snapback in October. For the most part, the majority of the year had been spent in a fairly tight range. Of course, the sell-off in August is probably a sign of things to come in 2016. But for the time being, the reality is that the US and the global economy, for that matter, are seeing slowing growth. So why then is it that stocks like Amazon.com and Facebook can continue to push higher? The reality is that these are the stocks that have become household names. Everyone knows these stocks. Everyone knows that these are growing companies. So this time of year, what's particularly peculiar about these stocks, particularly things like an Amazon.com and Facebook and others, while they have ultra steep slopes, if you look at the chart of Amazon.com, the stock has gone vertical now for some time. And the reason why it continues to go up is because at this time of year, you have performance chasing of fund managers that have basically missed out on what has been a frustrating year to date. So their performance is no good, much like the S&P 500, where most stocks didn't go higher and most stocks actually underperformed the broader market. So these guys are now forced to chase these stocks higher. Now, as far as the 6 month or even maybe 3 month view goes for me personally, for things like Amazon and Facebook and those kind of stocks, while I believe and see the growth stories, these stocks are likely going to take a pretty meaningful breather at some point over that time frame. In the near term, however, if we look at things like an Amazon.com or like a Facebook, the chasing that these fund managers have to do into year end, all else being equal, in other words, if we have some major dramatic geopolitical event or something happens with the Fed that folks don't like, that of course could change the picture. But all else being equal, these stocks continue to work higher in a technically sound manner. What that's telling us is that there's still money going into these stocks and chasing them higher. Doesn't mean they have to go higher in a straight line from here into year end. In fact, I'd be very surprised if it did that. But these stocks continue to be bid. In addition, it's not just fund managers being aware of this. The entire street, Wall Street, is pushing these stocks higher with positive research notes. I just got another couple of positive research notes on all these stocks this week already. So this is being basically fueled higher. And while I do think ultimately these stocks are going to take a meaningful breather, for the time being, they will likely, the path of least resistance to me looks to be higher for names like Facebook, maybe even Amazon.com, the Googles, and even the LinkedIns of this world. So I hope this makes sense, guys. Please like the video, subscribe to my channel, and I'll see you in the next video.